podcast you cheer for. Sneaker business talk. It's the Soul Material Podcast.
And welcome to the Soul Material Podcast, the podcast you cheer for. I'm the OGEO.
All right, it's T Martin Street Sharp.
And we are here to wrap up some more of that sneaker business talk. And we're really going to talk about business today because we are going to dive into just the changes over the past year or so, definitely with e-commerce and the IRS. So with it being tax time and tax season, it's always taxing, whether you're going to the grocery store, buying a sneaker or so forth. And just the changes that have gone on the past 24 months have been significant. And even with a lot of the third party selling that, most of us do, because most of us now, we buy, sell, and trade. It has been a big deal getting stuff in the mail when it's tax time. Like, oh, I did not know that rules have changed, and a lot of rules have changed. And I want the Shark and I to kind of dig into how it used to be and what would happen and how Uncle Sam's going to get his cut irregardless, as they say. So, Shark, you want to just kick it off with some of the changes that you saw and experienced and were kind of shocked by, and we should have saw this coming sooner or later because you knew we weren't going to be able to butter the bread, but for so much before Uncle Sam came knocking.
Yeah, I mean, so the biggest bulk is just the actual tax reporting in the first place. That on you, whether it's your StockX and eBay or Goat or anything nowadays, there's a threshold. The threshold is usually around $500-$600. That if you sold that much, the platform that you're selling it on, they have to report it, that activity. So now I'd love to know the science behind how that number was ever created. IRS, like for the large amount of these platforms, and then for what you're selling, and then for what we're talking about, sneakers. You mean to tell me if I sold 3 pairs of shoes, I got it now? Then this is just gross, not net. This is just what was exchanged on the marketplace. So you could have lost money on top of all of that if you really didn't know what you was doing. And now, I gotta report this. You could choose if you're gonna report it or not. But that's what I think that it's gotten mucked up, with how these because now they will freeze your wallet and not allow your funds to be released, because that's how StockX worked, where they told you, they warned you, you're going to have to update your account and send us your personal information because we have to report this and then send you tax forms annually now. And then if you didn't do it, they just froze your money. So if you kept using the platform and never updated your account, then because that happened to me actually, because I was just like, man, whatever, I'll do it later. And then I realized, I was just like, hey, my money's not getting deposited in my account. And then it took me 2-3 weeks worth, because then that was 10 pairs of shoes. And I was just like, wait a second. And then all of a sudden I filled the thing out. And then within a minute, it was boom, 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 boom. Here they just released all these funds. And I was just like, wow, clearly I sell so much that I didn't realize how much was it. I wouldn't get paid out on. I reconcile monthly though, but that alone, where it's just so in order to be a seller, I have to have my tax information out there and everything like that. It's ridiculous. And it's not quantifiable as to where the end game is, but the predictability, yeah, we saw this coming. You know why? Because these third-party marketplaces, that's the beginning of regulation. Is that because we're gonna break down the layers. Let's just talk about eBay only. All right, because eBay, you didn't even have sales tax in the beginning. I was gonna say in the beginning for us early 2000ers that were on the platform when it was still underground for sneakers. That is, so you didn't even have sales tax, and then certain states started coming in like, well, if it goes here, then they got to pay sales tax, you know, and then it's just like, who's paying the tax? You know what I mean? And then what happens is the business, this is no longer, well, let me just be very clear because this is real business talk. We're no longer, these platforms aren't sneakers and whatever. These are payment processing mediums, right? These are just forms to make transactions, right? Where you put sellers and buyers in the same place, and then you control the ecosphere and tax, and that's your business. So now we're in the business of other people exchanging money, doing their business. That's how we got here. You know what I mean? Because you're taxing the environment to regulate it because it grew too fast. Too much money is being exchanged. It's not being reported. That's why Uncle Sam was like, "Hey, whoa, 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 whoa! This underground stuff got popular. It became pop. So now we're paying attention."
The pandemic did a number because with people having extra funds, Shark, I think we all saw a tremendous spike, if you will, in a lot of the buy sell trade, and we talk about people who weren't in the sneakers.
Stimulus packages, you know, and PPP scams. That's how we got here. You know, go back to the beginning of exhibition for Soul Material.
Season 1.
We told you about the PPP you know, game that was going on in the sneaker culture. You know what I mean? It's yeah. You know, and that's part of what's here because it's just like, well, that got scammed, but that was, you know, why that didn't get regulated but so much is because all the people did was stupid. They spent the money back into the ecosphere, and that's what they wanted. You know what I mean? They wanted undisciplined people to just put the money right back in and circulate it back out. They didn't want you to save it and compound the interest and make something off of it. No, you know, we got fear mongered into just spending more money. We went through a pandemic, you know, and we spent more. Look, the consumers spent too much and threw off the demand. Because of this, you know, skewed the demand. So then the supply and toilet paper, and, you know, eggs now, you know, like it's just gonna keep evolving. You know what I'm saying? So when we talk about the business of other people doing business, that's what this is. And again, multiple times, Shark has told you the future is micro. It's not macro. It just gets smaller and smaller. Different ways to couple activity and then sit something on top of it to, you know, because so now look at these platforms. The seller and the buyer both get taxed, right? So I'm paying sales tax, and then and so does the. So why does the seller get sales tax and then the buyer pays sales tax? Who are you paying twice for the same thing? You're now paying the medium because now you have these processing fees on both sides. Like, this is weird that this is legal. You know what I mean? To keep drilling into the micro.
Only
right?
in America. Only in America.
Because it's just like, hey, we got you in the room, so, you know, come up off that jacket. You know, and now that you in the room, you can't get out, and you got no jacket. It's just like, yeah, so now you got to pay for heat. You know what I mean? After we took your jacket, you know what I mean? And they just keep taxing you to keep existing in here, and the sheep keep sheeping.
And the thing that gets me, Tony, is that thing with the 1099K form, I believe it is. It's very puzzling to me and very peculiar to me that when you get that either from PayPal, eBay, what have you, it's just the transaction amount. Like, it's not even the fees that they got out. And I'm like, and then you have to sit there, have your own spreadsheets, have your own tax records and so forth to prove that this is what came out. This is actually what I got net and so forth. You got to do all that stuff. So all they report is, hey, this shoe sold for $400. That's it, $400. And I'm just like, but you guys get y'all share off of the top immediately before you even send a payout. And that's just how it's reported always bothered me.
Well, think about the dollar of this. The dollar amount of the transactions have changed because they've grown. All right. We talk about that, how, it's actually more people. It's okay for people to spend more money. Like, that's cooler to spend more money, and to acquire stuff rather than like just getting it just to get it, and for retail or lower or getting a deal. So one, you're spending too much money. So therefore, the average sale price is skewed. Now more people have entered because it got too it's no longer underground. There's less barriers to entry. More people are coming. All right. So when so much money is being exchanged, there's no way that Uncle Sam is just going to sit by and just watch while the aftermarket. How about this? It's the aftermarket. Why does the aftermarket know that this is why the front end changed on the supply chain? This is why Nike says we don't need Reebok, we don't need Foot Locker, because we're gonna go direct to consumer, because we already know about the aftermarket, and the aftermarket is what's driving the front side of it now. So we don't need you middleman retailers, because half the people aren't consuming the product. They're there to sell it again. And Foot Locker is just like, okay, we won't put up a fight. We just bought into this other to the aftermarket. So we'll just go over there. And then he's played musical chairs on us. You know what I mean? So it's
Literally.
the same cyclical situation. And they're playing chess while everyone else is playing checkers over here. Because you don't see these moves coming. It was just
you just find out, or you were just told.
Yeah, if you don't know these ancient, playbook rules or whatever, on the chess thing, it's just like the rook's gambit. Like unless you know that move, you know what I'm saying, then it ain't going, you're not gonna see it. But again, that's why we try to give you that clarity over popularity, so that you stay informed on the marketplace. So that's not going anywhere. It's just going to be more of that, though. Micro transactions. Trust me. Hello, audience. Just want to let you know I literally work in payment industries world. So I kind of have a pulse on the trendiness of how things are working with tokens, digital wallets, third-party processing, and especially with e-commerce, and the way things flow in so many different levels. So kind of qualified to make these statements, to say the least. But this is serious business. So what are you going to do about it? Because you can't keep changing platforms, because it's everywhere. And you're going to have to. And another reason, to your point of the pandemic, we have gotten rid of cash in the marketplace.
Definitely. Definitely.
So there's more electronic payments to police. So therefore, there's that's what they got to do. So they got to track you. They got to track how much you. So collectively, with the dollar amounts, and think about how much we gross individually, right? So then, and now let's compound that amongst average sellers. Just extrapolate that, how high that number really is. Okay,
Tony, what happened to the time where it was like,
what do you think was going to happen to that money? That's my point. We
what happened
wasn't
to the
going
time?
to do no taxes.
Exactly. Exactly.
You know what I mean? Because eBay had to spend all this money. They had to do marketing. They had to do this because they had to drive more sellers, more buyers to the marketplace. And it worked. And now they're so big that they can't not do this, right? Because the part of their model is to continue to grow. You got to grow in revenue. You got to have more bells and whistles to your platform. You got to have the customer service. None of that is free. You know what I'm saying? So the taxing was going to come in somewhere, but I think it's a little egregious. I was okay with like eBay owning PayPal or buying out PayPal and then like making you have a PayPal account in order to open the eBay account at one point in time. That has changed or whatever, but that's how it was.
Remember, the threshold, Tony, was as long as you didn't go over 25,000, you were fine. And then it was like, 600. And I was like, oh, hold on, I got to report this now?
Yeah, because again, too much money entered the space.
It was like within like 24, it was like a year almost, or at least 2 years. Within 2 years, it was like how you go from 25,000 to now just 600, period.
Well, tax laws had already been changing since 2018.
Mm-hmm.
And then right after that, government shut down and a couple other little things that kept changing the way some of the economics worked. And in and out of our election cycle as well, because we have dipped in and out of a recession through a political cycle.
Definitely.
So and then a political cycle that peaked at a pandemic. Like, world history will actually tell you that the money was gonna do this. And what's gonna happen is too much flooded. Then there was stimuli, like we just said. So it got overinflated a little bit, and I'm very careful when I say inflation because it's been conflated over the last 2 years on what real inflation is and what the perception of the inflation, because some of the news that's out there about inflation is more fear mongering because it's not
Mm-hmm.
true today. It's
Mm-hmm.
just to fear you into what could happen, so that you make a decision that they want you to make today.
There you go.
You know what I mean? So you just gotta, again, that's why we break down those layers and let you know. So this was again, more of a heavy emphasis on the business talk and sneaker business talk, but the marketplace was going to continue to do this. This is why we told you in the beginning, stop sheeping. You literally can control the market if you have more discipline. Otherwise, you just want to keep throwing money at stuff. This is what happens to the marketplace eventually. All
It's
right.
regulated.
You know what I mean? More rules come in,
Unjustly.
and they tax you on both ends.
Mm-hmm.
It has been ruined for the seller and the buyer, and nobody cared about it. Like the third party platform gets to take money from both sides.
There you go.
Like what is the okay? I'm a seller. Why does the buyer gotta pay fees and stuff? It's like, I get it. Like DoorDash, I got the DoorDash fee and then the delivery and then handling whatever. Okay, those things make sense. You will buy a ticket, for airplane, and you got, it's only $150 plus. At least it's spelled out all the extra stuff that they put on there. What is this? That's what we're trying to break down for you. Is that you got to make better decisions when you enter these spaces, and move a little more strategically. It's not that you like, I'm only going to sell $599. I'm not saying stuff like that, but it's just like, be strategic. Like for me, now I held a sale. I sold the shoe recently for over $1,000, but I wasn't selling that shoe in December. I sold it in January. See you next year when you want to clock me for that. But you see what I'm doing? I've changed. How about y'all? You know what I mean? Like, work within the system the way that it fits you. Don't let the system, don't let the walls close you in because you're too rigid to move. In the business, the school of business, there's a theory. It's called the boiling frog theory.
Mm-hmm.
Right?
Mm-hmm.
Boiling frog theory goes like this. It sounds weird, but this is a real business scenario. All right. So if you put a frog in boiling water, as soon as you put him in there, he'll just hop out. It's hot, right? But if you put the frog in regular temperature water and then start to heat it up, the frog may or may not jump out. All right. So the parallel to business is that, the frog coming in from the outside environment, going into the new environment, as soon as it's hot, it knows instantly that it's not for me, right? So these decisions that say environment, wrong decision, do something else, right? But the frog that sat in the regular temperature water, and then it got hot, and then it doesn't jump out when it get hot. It's the same hot that when it jumped in. Think about the business that doesn't change. That's the boiling frog. Blockbuster video. We've talked about the East Bays and the other stuff, where you just didn't, there was somewhere you didn't pivot to the next thing, and then it just fell off a cliff. So don't be the boiling frog, okay? Because the boiling frogs got comfortable, right? Because what happens is he's willing to sit in the hot water as it continues to get hot, because somewhere in that brain it says, well, it once was colder. So if I stick around long enough, it'll go back to the way it was. And then you boil and die. You know what I'm saying? So don't be the boiling frog. That's the point. Continue to evaluate your environment as it changes, as it heats up. And then if it gets too hot, you get out and you move on to the next thing. That's the sign. All right. Grow, evolve, grow up and out. So there you go. Real business talk.
Definitely, because what I have been hearing at least the past 6 months, man, and I don't want to call people names and things, but guys vultures just literally crying about, I don't believe this is going on. And I was like, but like you just said a few minutes ago, Shark, y'all are the reason why this is happening.
Yeah, it's just, why you hitting yourself? Why you hitting yourself? And then you're wondering, well, in the end, just don't let it pass you by. Don't let it pass you by. So can't say we didn't warn you. So yeah, go back to some of those original episodes. Like this is like literally inspirational why we started this podcast in the first place.
Definitely.
To help people understand what's coming, how to navigate through it. And some stuff you just gotta accept. You can't be mad at it. But just know how much control you have over the future of what's going on. Because I'm telling you right now, it's gonna get more micro.
Mm-hmm.
All right. So what's the next thing? We're gonna have. I'm not gonna give away a couple ideas. It might be me that creates the next thing. But at the end of the day, it's really, I would never do anything to exploit people. That's what's happening. That's what's sheepish about what's going on. That there's too many things that are coming in that are being built by people that aren't a part of these cultures strategically to just make more money off of you. You know what I mean? So just stop being willing to pay so much. Like if you're paying $1,200 for a $150 shoe, what do you think is going to happen? You think that people are just going to allow this aftermarket to? You are setting the market by being willing to pay that. So now everyone says, if a nickel bag gets sold, I want in.
Particularly if the percentage is that high. You're talking about that's like a what 8,000%.
Come on, they gonna come get something. You know what I mean? Like look at the StockX, how they have these tiers of the percentage of the fee, and then they just keep bumping you back and forth in the tiers. And it's like punishment if you didn't sell enough for this month, so now you're tier 4 instead of 5. So now we're going to take 2% more until you sell back up, and then we'll start taking a little less. And then for the minor infractions or cadence, where it's just like, yo, you can't sell that many every single month unless you have your own freaking store. So one of these months you might not hit the volume or whatever. And then all of a sudden now it's just like, I went from 5 to a 3. You know what I'm saying? Now, oh, you're 9, 11%, whatever it is. That's part of the game.
And again,
so
not to be sour grapes, but again,
more of that.
Yeah, and not to be sour grapes, but even on my end, if there is an issue with the UPS lost package or what have you, you're on your own. Particularly with StockX, there's no insurance policy to say we got your back, although you sold $50,000 worth of merchandise this tax year. So that's a whole nother caveat to what we're talking about as far as on top of getting taxed. Just make sure you are using a source of which we talked about this before in prior episodes. You know the insurance policies, you know the return policies and so forth. And everything's a risk regardless, but you know the weight of the risk that you're taking. And usually everything is fine until something goes wrong. And that's usually the case.
Exactly. That's why I tried to use this business and hobby to fund businesses and other things. Shoot, this podcast, just being smart and strategic. Use it to your advantage. Okay. Build your credit off of this. At least walk away with something where now you have a business credit card or something, and you just kept flipping it using shoes or something. Like, walk away with something extra out of this. Get some cash, back bonus points with your purchases and stuff like that. Like, if you're just doing this just because you want to make the $100 per shoe or whatever, or $20 in the end or whatever after all these fees, and then my last bit of advice is for the sellers is sell. Okay, like, sell. Some of y'all are sitting there trying to squeeze so much out of everybody. That's why the marketplace is so dang flooded. Get the product, get it in and get it out. You know what I mean? If I'm going through this right now actually with somebody, where I try to slide them a deal, or I want a deal. And literally on two different platforms. One platform, they're selling it for $130. Another platform, they're selling it for $100. So I jumped on the platform and selling $100, and I was just like, I give you 80. And I did that because the other platform is actually offer up. All right, so you don't get all those fees, but they do have it. Depends on how you exchange, right? Because if you do it local, it's just like Craigslist. But then they have their own little pay buttons in there that and you can still do Cash App and PayPal and stuff like that. But the fees aren't the same. So I was just sitting there like, but you have this on eBay. I don't even care if it's for $30 more on eBay. That's still a wash after all those fees, and shipping and all the other stuff too. So, I let that person know that I've seen you, because they were just like, oh no, they wouldn't even counter me. So I'm only $20 off from your offer. First of all, I'm only $20 off. And I was just like, dude, like, let's give me this thing. You know what I mean? Because even if you sold it on the other platform, like, you're gonna not make this sale just to make what? $12 extra. There
you go.
You know what I'm saying? So I was just like, but I have it for you right now. And then it's like, yeah, well, it's on eBay, so it's gonna sell. And I was just like, first of all, your feedback is 4. It ain't gonna sell. And then second of all, I found you on eBay, and so I let you know. I've watched you relist this more than once. So you want this $80 now? And it was like, nah, I had to. It was a deadbeat buyer, and I was like, yeah, I saw the completed listing. I'm a seller. I know that people don't always pay. So today, you got $80. You know what I'm saying? And then it's just like that story. I know I just elaborated on that, just one thing. But my point is, just sell the damn stuff. You know what I mean? Stop holding on to this stuff. This is how the prices got what they got as well. You know what I mean? Just flood the market with sales. All right. And then it's going to start balancing out, because I also let that person know, oh, maybe you do or you don't know this, but you better sell this shoe, because you don't see all these sizes flooding, because this shoe is now at Ross, because Ross is back. We'll do another episode on that stuff, because Ross is back. All right. And that shoe is $54.99 at Ross. All right. So that's why all these new listings say $80, $75. So keep yours up longer. The prices are going to go down, and you're not paying attention. So, but you could have had your money. That's my point. You know what I mean? If you just keep, actually making the sales, you'll have better relationships with people. You'll be able to sell them again, and then you'll get more out of this stuff, because you should want to not only get new customers, you should also want repeat customers. All right. That's what we're lacking. Everyone just wants one-offs. And now, since there's so many one-offs and everyone wants to just tax and flood the market taxed you. You know what I mean? So, really went down that one just to give you this real deal on the business. But don't be that guy, and don't be the boiling frog. That's word from the shark. So
understood.
Wrap it up.
And I guess we'll be having this episode probably again sometime in the future, because as things increase, Uncle Sam is going to make his adaptations and changes, and you will find out with the notice. And that's just how it goes.
There it goes. All right. So for this episode, some real sneaker business talk. Glad we were able to give you that clarity over popularity. So from the podcast you cheer for, it's T Market Street Shark
And OGEO. Peace to you.
All right, signing off.